Hey, good evening. This is Ken Long. It's 29 July 2009. I'm going to do a combination demonstration here of Snagit and the Dow Quality Report. See what we can find for tomorrow and how we can use Snagit to help us develop our trading ideas for tomorrow pretty easily. So I've taken a snapshot of my Dow Quality Report, and as you can see in this column, it's sorted by the quality score on the time period 31 to 60, which takes a look at 2 months ago, and the quality score is calculated by average percent return divided by standard deviation times 10. And then the four color codes green, white, yellow, red reflects the mean, and then in the white it's within one standard deviation on the upside. Green, it's on more than one standard deviation above the population mean. Yellow is within one standard deviation below the average. And red is greater than one standard deviation below the Dow 30 standard quality score. So I like looking at the sort this way because I like to look for things that are terrible on the 31 to 60 days in the past, but which have improved. And then the first column here shows the 30-60 day quality score divergence, which simply takes, as an example, for AT&T, minus 0.73 quality on 31 to 60. And then it improved to 1.42, and the difference of that is 2.15. And because that's color-coded green, you can see that that is one of the, looks like about one of the five most improved quality scores in the last 30 days in the Dow. So it was terrible 2 months ago. It has improved reasonably well in the last 30 days. That's sort of an indication to me that AT&T might be turning around. Now I'm looking at this column here under the tickers. Those tickers that are highlighted green had a percent return today that was more than one standard deviation above the Dow 30 mean, and these ones in the red were things that suffered, in other words, one standard deviation below the average of the Dow 30. So what I'm looking for right away is, I'm going to expand this out here, is I really like Verizon, and I really like AT&T. For the same reason. They were both horrible on the 60-day quality score, and they've improved, however, on the 30 days, so they are really standing out in terms of improving. And they're both coded green today, which means that today's performance was exceptional for the Dow 30. So there's two reasons to love them. They are slowly improving on their quality, which makes them stealth candidates, and they had an exceptional day today when the market was down slightly. And so I'm looking at them immediately as a possible continuation play. So let me just mark that up real quick. So these are continuations and also stealth candidates. Now at the top end of the scale, I also like Microsoft. And here's why. It has the absolute best quality score in 3160, so it's at the other end of the scale. And even though it's been suffering lately, it had an extraordinary powerful move today. And because it's so big, it'll gather a lot of attention, and the market's been down 2 days, and technology has been the strongest sector. So after 2 down days, it would not surprise me to see technology resume its march north tomorrow. And if it does, Microsoft will probably be a leader there. And so this looks like a buy-on pullback opportunity to me. If we see strength in technology and if we see strength in the market, then Microsoft will be on my short list of things to buy. So I'm going to say it's got great relative strength compared to the rest of the market, and a possible continuation. Now, some of the other things that might stand out for me is I'll be looking at Alcoa. and the reason I like that one is just from a maximum pain perspective. Alcoa is one of my favorite trading vehicles, and whenever it's down exceptionally large, I like to watch it to see if I can game a rebound. And same for Caterpillar, and those look pretty good to me. So there's 5 trading ideas for tomorrow, just based off a quick read of the Dow quality. Now there's more insights we can gather from this report, but having 5 ideas for tomorrow is pretty good for me. So thanks for your attention.